Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Monday, December 5th, 2022. Welcome back to the podcast, Sekido-san.
Good to be back.
Always good to have you. And I can't believe it, but 2022 is coming to a close, almost over. Although obviously here at MUFG and many other Japanese corporations, we do have another 3 months to go before closing the books on our fiscal year. But back to topic, and this really, it almost isn't a fair question given how much happened in 2022. But could you try to review some of the key developments of the year, specifically with regards to yen rate and yen cross currency basis for our listeners to open up the episode?
Okay. The yen swap rate curve rose and steepened in 2022 as a yen yield curve, except for the short term and 10-year zones, rose. Speculation that the BOJ would normalize monetary operations grew as inflation around the world led G10 central banks to hike interest rates and scale back on monetary easing. However, the BOJ tightened control of the yen rates and continued to bolster temporary and fixed-rate JGB buying operations. But it also scaled back on COVID countermeasure operations, and short-term yen rates stayed low and stable because of the strong demand for JGB arbitrage trading amongst foreign investors. Dollar yen basis widened as dollar strengthened because of funding and hedging demand for dollar assets among Japanese investors, as well as reflecting the war in Ukraine and the calendar and fiscal year-end premiums. But demand for yen basis arbitrage trading amongst foreigners contributed to tighten yen basis.
Yeah, that widening was pretty significant. I know I was looking at 3 month basis as example, and it widened, in relative terms, the magnitude of the widening was like something like 2 or more x versus, how much it widened the year before, into, over the turn as example. But yeah, no, that was short and sweet, and really touched all the salient points. So so that's 2022. Why don't we also share with our listeners your outlook for yen rate in 2023 and the key factors that they should be watching?
We expect the 10-year JGB yield to gradually rise in 2023. Key events to watch next year in terms of yen rates will be the change in leadership at the BOJ, March and April, and the unified local municipal government elections in April. We expect the BOJ to begin normalizing the skewed yen yield curve and revise relatively low yen rates vis-a-vis G10 currencies from April 2023 under the new leadership. We expect the short end of the yen yield curve to gradually rise while remaining low and the long end, especially the 10-year zone, to rise and trade more in line with the rest of the curve while dollar yen basis remains wide.
Interesting. Okay. So investors, particularly foreign investors, have been sort of positioning for yield curve control to go away periodically for years, and have been wrong every single time. It sounds like they could actually be right this time, although the changes that you envision seem pretty, still seem pretty modest. And also interesting that dollar yen basis would remain wide, which also suggests that policy will at least be relatively easy in Japan relative to other developed economies. So switching topics entirely, the second supplementary budget was recently passed. Budgets are typically pretty dry affairs, but as we know from the recent debacle in the UK, the wrong budget can be an absolute disaster. So tell us about Japan's budget and more specifically what that means for TDB issuance, so bill issuance for those that follow the market a little bit less, as well as the JGB yield curve in general.
Okay. The government approved the second supplementary budget on December 3rd, So not only will issuances of 6 months TDBs be boosted by 4.2 trillion yen, 1.4 trillion yen per month from January onward, but an increase in issuances of 2-year JGBs by 0.3 trillion yen, 0.1 trillion yen per month was officially approved. Over the near term, the issued increased the TDB and JGB issuances related to the second supplementary budget will be absorbed by demand for TDBs and a yen basis arbitrage amongst foreigners, and the front end of the yen yield curve is likely to stay low and stable.
Okay. So it looks like that's, looks like sort of not a ton there to, not a lot of ton there in that budget to really change things. But why don't we look forward, look forward again and, wrap up the episode with your outlook across various markets, specifically spot yen rate, I'm sorry, spot dollar yen rate, and yen basis.
Public demonstrations in China against the government's zero COVID policies have stoked risk aversion and yen buying, and the Dai yen has fallen from the mid 139 level to the mid 137 point. Federal officials have also made some hawkish comments on policy, but Chairperson Jerome Powell has indicated that the pace of rate hikes could slow in December. This has resulted in U.S. rates falling and the U.S. dollar to weaken. We expect the November U.S. employment data showed the sense of the tightness of the country's labor market. And the University of Michigan consumer sentiment data will likely support lower U.S. interest rates and limiting the upside for Dong yen. We see the Dong yen trading between 133 to 136, still with a bearish bias. The yen swap rate curve is rising, especially the belly. The Ministry of Finance will hold a 30-year JGB auction on December 6th. The BOJ released its December JGB buying plans in the evening of November 29th, and the plans are the same as in November. However, it also announced the easing of conditions for lending the cheapest JGB names. The BOJ has indicated it will continue to tightly control the 10-year JGB yield using a daily fixed rate JGB buying and JGB lending operations. We see a neutral bias for yen rates out of super long sector. The yen basis curve has been tightening. The Ministry of Finance weekly securities flow data shows that the Japanese investors continue to unload foreign securities via net 493 billion yen in the week of November 20th to 26th. This included net selling of foreign stocks and investment fund holdings by 239 billion yen, short-term foreign bonds by 202 billion yen, and medium to long-term foreign bonds by 51 billion yen. Japanese investors unloaded medium to long-term foreign bonds, for fifth straight week, but only by a small margin. Japanese investors may be nearly done realizing valuation losses on their foreign bonds. During the same week, foreigners unloaded a net 5 trillion yen of Japanese securities. This included net selling of short-term yen bonds by 5.4 trillion yen and medium to long-term yen bonds by 45 billion yen, as well as net buying of Japan stocks and investment fund holdings by 442 billion yen. Overseas investors have been putting off rebuilding their TDB holdings, but looking forward, we expect foreigners to maintain their preference for TDBs, since Diane Ford arbitrage trading still holds relative appeal. On the other hand, we expect Japanese investors to continue to review foreign bonds. We maintain our view that yen basis will continue to tighten.
Okay, so to summarize, you are bearish on dollar yen, which is pretty amazing, just given the fact that it's dropped like almost 15 big figures, since since mid-October, but the move, that same move over the course of time, that same move in treasury yields is, it's a pretty similar story there. And there seems to be no signs of that rally letting up either. And then neutral on JGBs as Bank of Japan policy successfully controls the yield curve, although that control is obviously only to the 10-year point of the curve. And then you are seeing a tighter bias on basis, despite the fact that you think that Japanese investors might be done sort of selling out of foreign bond portfolios. So a lot of stuff there, and great stuff as always. Thanks again for coming on the podcast, Sekido-san.
Thanks for having me, John.
And thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.